Yo, welcome back to Stock Capital. Don't forget in the description below, you can get a free stock. I'll get a free stock when you use my referral link to the Robinhood app. Those of you who are interested in learning and buying stocks and getting into stocks. This is not going to be about stocks. This video is actually going to be about. Sorry about that. Real estate. Um, and forbearance and things that's going on like that in the world. Um, all these different asset strategies in order to build assets and build wealth. Two main ones is what? Stocks and real estate. Those of you who may know me or don't know me, let me introduce myself. My name is Savalas Williams. I have an associate's degree in real estate. I have a certification in real estate. I also have a certification in commercial real estate as far as property management. I'm also a current student at J. Morrison Academy as a real estate and wealth building academy online. J. Morrison is a real estate developer who has over 20 years experience in real estate, right? I'm also a current student at Menlo Business College and here in California in Silicon Valley, um, pursuing a bachelor's degree in business management with a concentration in real estate. Boom. All right. So go over here a little bit. Now, one of my favorite guys to watch about financial advice and financial things and in the world, basically, is a guy named Meet Kevin, right? So, one thing that I kind of disagree with him about is a subject of I love all his other videos and his material and his content is amazing. But one thing that I disagree about is he was talking about taking forbearance as far as homeowners, right? So those of you who may not be familiar, what's happening since COVID-19 has hit is uh, lending companies and some banks and are allowing homeowners to take what's called forbearance. And forbearance means you can go without paying your mortgage for either six months to a year, and they're going to take that amount or those payments that you missed and put that on the back end of your mortgage, right? And so what me Kevin is saying and telling people is basically that, especially on his last video that he did yesterday, and he's telling people that, basically what he's saying, you're stupid if you're not going to, if you're a homeowner and you're not going to take forbearance, right? But he didn't say stupid, but basically that's what he's saying, right? I don't want to put words in his mouth, but he's saying take for even, and then the studies show, which he showed on his YouTube channel, that over what uh, 70 people who filed for forbearance and took forbearance on their properties didn't need forbearance, right? They weren't in a situation where they lost their job or they were about to face foreclosure or nothing like that, right? They just did it just to be safe, right? Or to put money in their pocket, right? To save that money. And the thing about taking forbearance is this. Um, After this year or 6 months or your term with your lending company is up with forbearance, after it's done, right? Then you have to wait three months at least minimum, right, before you could do any kind of refinance to your mortgage or to your property, if you wanted to, right? If you wanted to, that's the key thing. You have to wait 3 months after that. And so basically, what Kevin is telling people is that um, you should not pay your mortgage, take forbearance, save that money, and you could invest in stocks, right? I love stocks. I love real estate. It's my two passions, right? But here's the thing: you can't say, "Well, everybody should do this," right? And I'm specifically talking to the people who don't need forbearance, right? To the people that we talked about, the 70% who took out forbearance and don't need it, because the other 30% who took it out, they actually need the forbearance. And I suggest everybody take the forbearance if you need it, right? If you lost your job, you don't have an income, take the forbearance. If you lost wages, right, because of Corona, maybe you were making $50 an hour and now you're only making $25 an hour. You need the forbearance, right? Um, Maybe your spouse or someone who else was going helping you pay the mortgage, got sick, got laid off, lost their job, lost their income, and you don't have enough money to pay the full amount, take the forbearance, right? In the long run, if you take the forbearance, people who need it, and if they take it, the backside of that is, um, what if you can't pay your mortgage still after your time is up, with the forbearance? Then you have to work out something else with your lender, uh, to maybe extend your current mortgage, right? Taking a 30-year mortgage to a 40-year mortgage, that may reduce your monthly payments. Um, but here's the thing: everybody's in different situations when it comes to property and real estate, right? And so I'm just going to talk about my personal, and this is why I disagree with, what Kevin is telling people, right? My personal situation is, and this is why I'm not. Let me just say this: this is why I'm not doing forbearance on my property. So, um, in 2018, I had to redo my mortgage with my lending company, right? So I already have a mortgage. I already had to redo my mortgage with them, just 2 years ago, right? So that was one thing, right? I'm not gonna get into the details of that, but that's one thing to keep in the sign. So I just redid my mortgage with my mortgage company 2 years ago. It's still pretty much fresh. Um, I have about $56,000 of equity in my property right now. So we're not gonna get into equity and what that is and how that works, as far as like how to calculate equity. If you don't know, then you can YouTube it somewhere else or something, or I'll discuss it later. If you want to know, leave a comment below. I'll talk about a video about that later. But I want this platform to be used for basically stocks, but this was on my heart. So, um, and so I have about $56,000 of equity in the property. I'm currently fixing my credit, getting it rebuilt, restored, and repaired, right? And so the goal is to do, a refinance on that property about a year from now, right? If I took out a forbearance, so it's a rental property, and so what's happening is the renters, they pay their rent every month on time, even still. I have great tenants, and so, that, amortization is going down, right? So the what I owe is going down every month because of my renters. Thank you for the renters, right? So that's going down every month, creating more equity, right? If I took out forbearance and just collected the money from the renters, I would lose about, I didn't even do the numbers, but let's just, well, it was 8,000 for, I would lose about $8,000 of equity. I would close to $8,000 of equity between now and a year, right? If I stopped, if I took forbearance and just took the money from the renters and held on to it, and not, put it into, my mortgage. And so not only would I lose that, but also I would have to start paying the, so I would take forbearance. It would be for, like, I looked up on my lending company, it's like for 6 months only, right? And so that means after 6 months I would have to start making payments again. And it just not, it wouldn't be a good strategy. It just wouldn't be a good strategy. Now, by me not taking forbearance, like I said, I can continue to make the payments to the mortgage company. I will continue to create equity, so when next year comes around, I'll be able to do the refinance, right? My credit will be in better position, right, to get better rates. I know right now the rates are extremely low, but you still have to have decent, credit, right? And I'm trying to have extremely great credit by next year. So, even when rates go back up, I can still get a lower rate, right? Um, the mortgage will continue to go down, creating more equity. And so if I stop doing that, and then they're saying it's not going to take a hit on your credit if you take forbearance, it's going to be some kind of mark, some type of a note. You know what I'm saying? If I go when I go to, and even when you go to do the refinance after you take a forbearance, you have to wait 3 months. So if I did that and I took the forbearance, that would be like I would be done in like December, January. Then I'll have to wait 3 months, which would put me into like March or April before I could even refinance. But by that time, it's like I could have been putting this money towards the mortgage the whole time. All right, so it doesn't make sense. So my thing is this: don't take the forbearance if you don't need to. Right? The forbearance is not for everybody. Right? You're gonna have to pay that back in the long run anyway. Who knows? We really still don't know that ramifications of taking out the forbearance. So let's say, and here's another thing: what if you only have 5 years left on your mortgage and you don't need to take out the forbearance, but you take out forbearance? So now you done added another year to 6 months, a year or 6 months onto your your terms when you didn't really need to. Just keep paying it off. You're almost done paying off the house, right? If you just bought a house and you lost your job, then anything dealing with losing a job, losing money, take the forbearance. If you haven't lost money, you haven't lost income, don't take it and just put money in your pocket. I wouldn't even suggest taking it and investing that money into stocks or anything like that right now. Continue to create the equity, because look, if you take the money, put it in your pocket, or take the money and invest it in stocks for the next 6 months to next year, and let's say, you know, and you plan on taking that money back out and then paying that, once you get done with your investing. I mean, of course, you could always lose money when investing, right? But let's say let's say you gained 20% on the money that you took out. What you gonna do with that 20%? Are you gonna leave it in the stock market, or are you gonna put that on your principal, right? So you gotta think about all these kind of different scenarios and different options. That would be a good thing if that happened, and if that's your plan, then hey, go with it. But if you're trying to do a refinance or you're trying to make other moves using equity within your property, I wouldn't suggest taking a forbearance right now. Like I said, who knows the ramifications? Maybe it's all these different scenarios that we really don't know yet, because we're still at the beginning stages of this thing, right? You could be, into your mortgage 10 years, right? And you don't need to take out a forbearance, but you take it out anyway. And then let's say, you get back to the point to where as you start paying back your mortgage 6 months to a year from now, after keeping that money. And then let's say 3 years from now, you go to sell your property, right? But then the money that you owe on the back end, that may come up, from your proceeds, right? So let's say you thought you was going to walk away with $20,000 from the sale of your property, but instead of walking away with 20, they take out that 6 months or that year that you took on the forbearance, and they deduct that. I mean, we don't know if that's going to happen, and many people saying that's not going to happen. It's just going to be an extension. But do we really know who has done it? If anybody here has already done it, let me know. I'll wait. You haven't done it. Nobody's done it yet. You know why? Because this thing is brand new. And so I'm just like this. Don't take no chances on that if you don't have to, right? If you have to, then by all means, do what you got to do, But if you don't have to take forbearance, then don't take it. You know what I'm saying? Like those 70 people who taking it, who don't need it, and they try to do something else with their property later, even sell it, even sell it. You don't know if that's going to come back on you. Now, it might not, and you might just walk away so nice and smooth, and get away. But maybe that's just me being a black man and being suspicious of the system. Because another video that my man Kevin did, hold on, he talked about the wealth gap basically between black families and white families, and how homeowners benefit more, and why white families doing the stimulus are making more money during this pandemic than black families. And that's simply because of them owning property and having the ability to take out a forbearance. If you own property, you can take out a forbearance, meaning you can put that money in your pocket and quote unquote invest in the stocks if you wanted to, right? Or try to be smart with the money that you were saving or putting in your pocket and not paying the mortgage with, right? And so that would give white families a more of an advantage and separate and make the wealth gap between blacks and whites even larger, which is correct if they did that. And so me as a black man, as a homeowner, and me trying to do other things anyway, right? And my situation's a little different. Um, with already taking out a modification to my loan, and then my credit just being about around 600, not being at the 780, not being very high where I want it to be, you know, and so and me just being suspicious of the system, like yo, if I take out this forbearance and I go to sell my property in a few years, or I go to do my refinance next year, and they're like, nah, you can't do it, or we can't give you this amount because you took out this forbearance, during the pandemic, and so you thought you was gonna get back 25,000, but now you can only get 5,000. That's not. I can't risk it. I just can't risk it. Right? I can't risk the unknown with my strategy that I'm doing. Right. And so my advice to be, once again, if you need to take out the forbearance on a property, do it. You lost your job, you lost your income. To that 30% who took it out because they needed it, to the 70% who took it out just to take it out or just to feel safe, I don't know. Hey, please subscribe. Remember, if you want to buy stocks, use my referral link in the description below. Also, go follow us on Instagram at stock_capital. Until next time, remember, we keep 3 things in mind. Number 1, set a goal. Number 2, educate. Number 3, invest time and money.